Paying off collections before buying a home. So congratulations, you're looking to making a home purchase, and your question is how do I get myself in best position to get the best rate for that mortgage? In this episode, we're going to discuss collections and how some matter more than others. We'll then examine whether attaining a mortgage is possible with collections. We'll then dig into whether you should pay off your collections or if that even makes sense. All right, let's get to it. One of the most important aspects of a collection is the age of that collection. In other words, a collection that recently hit your credit is going to be much more impactful than a collection that happened 4 or 5 years ago. Now, since we're talking about buying a home, we're going to use the mortgage score, which is going to be FICO 2, 4, and 5. The mortgage score is supposed to be telling as to the ability of a borrower to pay back money in the next 24 months and not be 90 days late. So really, any collections that hit your credit in the last 24 months is going to carry a lot more weight than if it hit your credit 3 or 4 or 5 or 6 years ago. Another area to look at when examining a collection is the statute of limitation on debt for your specific state. As an example, in Texas, where my company is located, the statute of limitations is 4 years. And what that means is that after 4 years, the creditor can no longer sue a borrower who has a collection. Okay, so that statute of limitations that we're talking about in Texas, they can't be sued after 4 years, but they still legally owe the debt forever. And that's something that I want to clarify because it seems like people are confused about that. You can go to Google and you can Google statute of limitations for debt for your specific state and it's going to come up. And then depending upon the state, it can be anywhere from 3 years to I've seen as high as 10 years. Depends on the state that you're in. So it does matter what collection is actually on your credit. Is that collection from a bank? In other words, did you have a Credit One account that you never paid back and then it went to collection status and now that collection agency has purchased that debt and now they're trying to collect on that debt? Or is it a situation where it was a medical procedure and a medical debt had hit your credit? Now, those two collections are going to carry very different weight. And the predominant reason is because for the Credit One collection, that borrower was actually seeking credit. He was seeking credit, got the credit card, and then didn't pay the debt back. For the medical collection, a person doesn't seek medical debt. They go for a procedure because it's absolutely necessary. And then sometimes debt arises because of all kinds of different reasons. It could be insurance failed. It could be they couldn't afford to pay it at the time. It could be that they sent the invoice to the wrong address. There's lots of reasons why medical debt incurs. But just know that if you're seeking credit and a collection occurs as opposed to non-seeking credit behavior and a collection occurs, two different things, and they're going to carry different weight. Huge question, and it's asked all the time. Do I have to pay off my collections to get a mortgage? So many of my clients come to me, and their main goal is to get a mortgage, and they're concerned about some collections that are on their credit profile, and they find out after we do the analysis that actually you're qualified for a mortgage, and getting rid of those collections is maybe or maybe not going to help you to the point where it's going to matter. So in many cases, it depends on the loan program and the specific lender. As an example, most of my clients are going to be first-time home buyers, and they're going to be trying to attain an FHA mortgage, which is a government-backed mortgage. And an FHA program is perfect for first-time home buyers because it's a much easier program to get into as opposed to a conventional loan program. Okay, FHA loan programs completely ignore any medical collection debt. Now, that's not to be confused with the scoring algorithm to get qualified ignoring that debt because it doesn't work that way. So, as an example, if we have a client who has medical collections and it's causing them to not be qualified on the mortgage score side of things, we have to address those medical collections. If we have a client that has qualifying scores, above that 620 usually mark on their mid-mortgage score, and they have medical collections, FHA ignores them. It doesn't matter. If they already have qualifying scores, then we don't have to address them. Okay, now in terms of FHA and non-medical collections, there is a penalty. If you have above $2,000 worth of non-medical collections on your credit profile, FHA guidelines require that they take 5% of anything above $2,000 and they work it into your debt-to-income ratio. So let's say you're eligible to buy a $2,000 home with principal, interest, taxes, and insurance. And let's say you have $5,000 worth of non-medical collections on your credit profile, and you're going for an FHA mortgage. 5% of $5,000 is $250. So before we were able to purchase $2,000, now they've got to reduce that to $1,750 to make up for the collections that are non-medical. So let's talk about student loan collections. The reality is that student loans are a really big deal if you're trying to get an FHA loan. The reason is because FHA is backed by the government. Student loans, unless they're private, and most of them are not private, they're federal, are also backed by the government. So the first thing the lender's going to do if you have student loan collections is they're going to pull what's called a CAVERS report. The CAVERS report is going to let them know immediately if you have any other government liabilities. That means tax implications, student loan implications, and anything else that might be owed to the government, like maybe the government overpaid you if you're in the military or anything like that. So once they pull the CAVERS report and they see that you have student loan collections, the only option is going to be to rehab your student loans in order to use that FHA program, and unfortunately that can take up to 9 months. The rehab process for student loans is relatively easy. The government has already set up a website. All you have to do is go to this website, create a PIN, and then find out where your student loans are. Most likely the government has outsourced them to one of a few different collection agencies that they use. You have to start a repayment plan, and it's based on your disposable income, and you have to stay consistent with that repayment plan for 9 months. And then what ends up happening is that all of your collection accounts that are on the student loan side end up being moved into a normal account. Now, that doesn't mean the collections will go away. It just shows that there's no longer money owed on those student loan collections, and you're back into a non-default status. Please like this video and subscribe to my channel. I'll be working hard to bring you a video each weekday over credit, lending, real estate, and other personal finance topics. Okay, now let's look at what you should do if you do indeed plan on paying off collections. The first thing that you should do is you should take a look at the collection account that's on your credit profile and analyze it. Do you even know who that third-party collection agency is? Do you have any idea who they are? Most clients have no idea who Portfolio Recovery is, or Midland Recovery is, or AR Receivables is. Those are all third-party collection agencies, and most clients don't have any recollection of who they are, and they can say within legal limits that they've never done business with those companies. That in and of itself is enough reasoning to dispute that account. If you've got a collection that is unrecognizable, and that's your truth, then you should absolutely dispute that collection. Now, in order to dispute effectively, you want to reach out to the bureaus and you want to say, as an example, if this is your truth, that I've never done business with this company, please remove from my credit profile. At the same time, you want to reach out to the collection agency and you want to ask for validation of that debt. In that validation letter, you want to ask them, hey, first of all, only communicate with me in writing. Secondly, send me proof of this debt. Now, if the collection agency sends you verification of that debt that shows that, hey, this is actually debt that belongs to you and you recognize that debt, and the 3 credit bureaus can also verify that debt, then you might be in a situation where you might consider settling it. Okay, so now if everything is checked out, you've done your due diligence on the accounts have no errors, and indeed they're verifiable, and you recognize the debt and you're willing to settle, we need to move forward kind of with the next process. Now remember, the debt, the collections that are carrying the most weight are the ones that happen in the most recent time frame. So that debt that happened last month is impacting you way more than the debt that happened 5 years ago. If that debt from 5 years ago is, as an example, and this is just kind of throwing numbers out there, the debt from 5 years ago is $5,000. The debt that just hit your credit is only $50. That $50 collection is going to impact your credit in a much bigger fashion than that big old debt from 5 years ago. So we're going to take the collections that happen in the most recent, right? And we're going to decide what to do for those. Now let's say that you have a total amount of collections that hit your credit in the last 24 months that total up to $2,000. Now know that if you're kind of trying to create a budget for yourself in terms of what you can afford, know that those debts will be settled. They'll settle for 40 to 60% of what the collection agency is asking. A lot of people think that they can settle this debt for like literally 5 cents on a dollar, and that's not usually the way it works. It's usually 40 to 60% is fairly reasonable. Okay, now, if let's say you have 4 different collections, all for $2,000, you know you're gonna be able to settle that debt between $800 and $1,200. There's a few kind of strategies that are good to go by. The first strategy is that when it comes to that specific collection, if the collection agency has XYZ name and they say who the original creditor is, try to settle with the original creditor if possible. And there's a real good reason for this, because if you've got a collection purchased from an original creditor and the original creditor takes the money, in other words, they take the settlement money, there's a real good argument that perhaps the collection shouldn't be there anyways. And in some cases, the original creditor will actually retract that collection if they receive the money firsthand. Another option is going to be a pay for delete model. Not a whole lot of collection agencies will participate in this, but some certainly will. And what that means is that you offer them payment at a percentage, and sometimes it requires full payment, in order to have them retract that debt from the credit bureau so that collection no longer exists on your credit profile. Now remember, if you're going to pay off a collection, in most cases, your scores aren't going to necessarily increase, so getting those removed is going to be very important in the process. So if you can get them to agree to a pay for delete, then I would certainly go that route. But remember, when you call in, they are recording the phone call. So if you ask for a pay for delete and get aggressive with them about a pay for delete and they deny you on that, they now have you on recording asking for that deletion, and it can make it really hard to get removed in the future if you decide to settle it. Now, when dealing with collection agencies, understand that there's a real person on the other side of that. They're an employee for that collection agency, and they're just doing their job, right? So honey always wins these types of wars. When you go in, there is going to be a limited amount of negotiation that needs to happen, but be kind and respectful, and try to work as a team to get this debt resolved. Okay, now let's say that they don't do a pay for delete, but you decided to go ahead and settle the debt anyways because you understand that it's your debt, and you're hoping that in the future you'll be able to get that off of your credit. What you do very next is you're going to send another verification of debt to the collection agency after it's been settled, and then also you're going to dispute it with the bureaus. Now let's say that you have settled a collection with a collection agency and they said that they would delete it off of your credit profile. And this happens very, very frequently where the collection agency doesn't necessarily say they'll delete it from the credit profile, that will send a certified statement to the credit bureaus that the balance has been paid in full. So a lot of times these collection agencies will actually kind of double talk the client to make them believe that it's going to be removed. And in some cases they say that they'll remove it and they do not remove it. So if this is your case and you've settled it and you've disputed it with the bureaus and you've asked for verification of debt after you've disputed it, then something that you should have in your arsenal is going to be to file a complaint with the CFPB. Now, the Consumer Financial Protection Bureau is a great place to address those types of issues. And the complaint should be very applicable to your situation, but I'll give you a run through of what a possible complaint might look like. Okay, so let's say that you had settled a collection with the collection agency. They told you that they were going to remove it from the credit bureaus, and it turns out that they didn't remove it from the credit bureaus. You've tried to dispute it with the credit bureaus and you haven't had any luck. And XYZ company collection agency is really at fault here because they didn't tell you the truth. They wanted your money, they scammed you into giving their money, and then they didn't do their part. And you've done everything possible to try to get that cleaned up. The CFPB is a real good resource for that type of situation. And simply put, you just tell them the facts of the situation. I paid XYZ this amount of money for this settlement. They told me they'd remove it from the credit bureaus, and they did not. Now, the website for the CFPB is www.cfpb.com, and you can click Start Complaint. And put in your factual complaint about the situation that happened. This also works really well for fraud and all kinds of other good situations. Just make sure that your complaints have merit and that they're factual. Don't make up a bunch of stories, because the reality is that once the CFPB gets involved, they're going to check that circumstance or that situation, and they're going to know if you're not being truthful. And besides, it's just poor form. Don't be untruthful when it comes to these types of situations. It's just not good.